Welcome aboard to the Captain Crypto Show. Today, we join the Captain's Council to discuss the latest developments in the world of cryptocurrency. Here's your host, Kylan Hurt.
All right, ladies and gents, welcome aboard to the Captain Crypto Show. Tonight, it's another episode of our cryptocurrency roundtable, what I call the Captain's Council. So tonight's a special episode because we're actually going to be coming to you live on Facebook, Twitter, and YouTube. So who's us tonight? It's me, Captain Crypto. Name's Kylan Hurt, and I'm a front-end engineer for Edge. And Edge is a company that works in the cryptocurrency space, and we create mobile applications for securing people's private data. So within cryptocurrency, that specifically means storing their private keys to their cryptocurrency. So we have a mobile wallet for Bitcoin available on iOS and Android, and we're coming out with our new Edge wallet within the coming weeks. So stay tuned. And the other co-host tonight, we have Brett, aka Maverick, of the Edge team.
Yo.
And he does business development for our team at Edge. And he, in general, is very familiar with who's who within the world of cryptocurrency, right?
I try.
He tries.
Yeah.
All right, and then our other co-host tonight is our resident day trader over there. Tay, how's it going?
What's going on? I wouldn't say day trader, more like swing opportunity.
Swing opportunist. There you go.
A swinger, basic sexually oriented. Okay. We're not going there.
One of us might be. I don't know. Okay, so tonight there have been a lot of developments within cryptocurrency, and I guess the biggest one to start off with is the recent plummet in cryptocurrency prices during the last week or two. In December, Bitcoin had hit an all-time high of about 20,000. And I remember when we were seeing drops recently, drops of about 30%, something like that, people would say, oh, that's nothing. Cryptocurrency's seen 70% drops before. So from 20,000 to about 5,800, I think was the lowest that I've seen during the last 48 hours. That is somewhere around a 70% drop, maybe even a little bit more than that. So I guess, Brett, I'll start off with you. The first question is, should we be concerned? Are the fundamentals of cryptocurrency, are they damaged goods right now, or will they spring back to life?
Yeah, the fundamentals are stronger than ever. We've got multiple new on-ramps into crypto. We've got some big announcements from players like Samsung that are getting into mining. We have, like we're going to talk about later in the show, the Senate, the recent Senate hearing on cryptocurrency and blockchain. So, and we have the deployment of the Lightning Network, which, judging from the development community around Bitcoin and cryptocurrencies, they're really coming online, downloading some of the Lightning Network software, running nodes, funding channels. Right, there's a lot of excitement. So the fundamentals, since I've been in crypto, are stronger than ever. What happened, and the best explanation of what happened, is there was just more sellers than buyers at a certain point in time. And the two key words are weak hands, right? We have a lot of people that are just selling and dumping some crypto on the market, and we also have probably some whales in there taking some profits, maybe consolidate, moving into other assets or other cryptocurrencies. But to me, it's a healthy drawdown, something that we've talked about before and expected. And one of the best predictions I saw recently was from one of the best thinkers and investors in the space, Ari Paul, who is I think he's the chief investment officer of Block Tower Capital, and he was basically saying that there's a good chance, and he says a month ago or a couple weeks ago, that Bitcoin will trade at 6,000 and 50,000 in 2018. Just because we have a lot of new people that don't really know what they're buying. The technology we have is pretty much exponential. Every new user that comes in really beefs up the value of the network. And then we have a wall of institutional money coming in. So the fundamentals are incredibly strong. I've never been really more sure of it, and I've been pretty sure in the past. And, everything's a go. We just had a little correction where obviously there was a lot of people that bought stuff that they weren't willing to hold on to for more than a month. They thought it would just triple overnight, and that's not how things work.
Yeah, I think that's one of the big takeaways here, at least from my perspective is, since I work in the industry and I've been kind of a long time advocate for cryptocurrency, I believe in the long-term prospects. To see it go from 20,000 down to 5,800 and know that people are still selling at 5,800, at $6,000. On one hand, I want to say that's completely insane. But on the other hand, if you have rent to pay and you've already doubled your money in the last 6 months or more, then maybe that actually does make sense for the few people out there who are apparently doing that. Tay, what do you think? People are selling at that price?
People are selling that price just scared. Weak hands, you know what I mean? Like no
Get out, weak hands.
You know, no cojones. They just don't realize the basics of investing in a game like this. I think a lot of people come in and they think it's like the stock market where they're going to put some money in and then watch it grow for a few years at a slow rate. But we saw what it did over the holidays. It just took off and skyrocketed. And a lot of people got in probably above $10,000 and now it's going lower. I know personally some friends that have family members that got in above 10,000, got shook out, got back in, and got shook out again. You know, and I'm like, and I personally told them, wait until the end of February and see what happens. Like, if that's the short term. The long term is you shouldn't be investing in anything that you have to pull out within a year.
Right.
And then also rule number 2 is you shouldn't be coming in with the amount of money that you have to worry about it.
Exactly.
Because there's plenty of people that have whatever you can spend in a weekend, or, you know, I'd say a lot of people spend $100 per day on a weekend, going to bars, going out, when you really add it all up, right? So what do you think? Like, you can just sacrifice one weekend of not going out, staying home, and then put that amount of money in? Or whatever you got to sacrifice, that you sacrificed it already. If that money goes to zero, which is the lowest it can go in crypto, is you just lose your money. You're not going to owe anybody money.
You were going to consume the money anyway.
Right. Unless you're, you know, taking out a credit loan, which they're trying to make illegal, which should be illegal anyway. I don't know why, you know, you're betting on a speculative asset and then you're going to take credit against it. That's not a good move. So if you're coming with money you have that you're willing to lose in this game of crypto, just wait it out. You know, like it's been proven to work over the last 8 years. People that wait out the dips or even buy the dips if you want to turbocharge your profiting process and then move on. A year minimum if you're new to this game. A year minimum.
Yeah. Like they say, don't spend more money than you're willing to lose. And I always tell people to look at it as a long-term investment, because in the short term, you can get absolutely wrecked. I mean, there's no doubt about that. So one thing that I was thinking about was that a lot of our big advocates for cryptocurrency say, okay, when there's hard times, even when there's good times, hodl, right? So just keep on holding on to your cryptocurrency. And I was kind of had like a shower thought the other day, and I was thinking, well, because I'm one of those people who just tends to not stress about things, but just to hold onto the cryptocurrency, try not to time things correctly, because that's a little bit of a risky game. But it did kind of occur to me that maybe if there's a good amount of people out there just holding on for dear life, maybe that's not necessarily a good thing. Maybe that leads to volatility, because when the price goes up and it starts to go up crazy, if you're just holding on, then you are not providing any downward pressure on the price. Also, when it goes down, you won't have any money laying around from what you sold earlier in order to buy and put upward pressure back on the price. I'm curious if you guys think that
I think that's a
it's a stretch.
Yeah. It's a stretch, and it's also depending on your time horizon. You know, like if I say
and your individual situation, right? It's all situational.
Yes.
But there needs any type of money needs to strike a balance between hodling or hoarding and volatility, or not and velocity of the money. So the money changing hands, but it also needs that support base which hodlers are providing, right? Yeah. And that's what a reserve currency like the U.S. dollar does. There are a lot of hodlers out there, right? A lot of central banks that hold dollars or gold. Right, and then it's also used when people want to exchange it. There is some velocity of that gold or that paper money, and Bitcoin will go through the same. It'll be subject to the same forces, but what we've seen over the last, I guess, couple months, right? And I've been following a metric that I think gives me a pretty good feel of what maybe like the true price of Bitcoin is. I guess to smooth out some of the volatility, but the 200-day moving average.
Right.
And Trace Meyer has used this.
Yeah,
and it tracks pretty well to Metcalfe's law as well, which is basically a law that, or a concept that basically says that in any telecommunications network, and the internet or the phone or Bitcoin would basically be described as, because every new node on the system in Bitcoin makes the
network
the
effect.
network that much more valuable, right? And the 200-day moving average, I think, tracks that pretty well, and it's been around 7,000 to 9,000 over the last couple, 6-7 months.
Right.
So I think I see a healthy price in the 7,000 to 10,000 range, and past that, we've seen a low information buyer coming in the sense, and low knowledge buyer, where they basically got onboarded and got swept in emotionally because of all of the, the media zeitgeist and the hoopla around Bitcoin. So they rode that wave up, bought all the way at 19, and then basically it's come down all the way back to that kind of 200-day moving average. And that's what I see a healthy consolidation around, 7 to 10 grand, or we'll see that. And we're poised for another huge ramp up with institutional money, which is patient money, right? Smart money that has been watching these gyrations and they're just around the corner to make some big moves, right? And they like that a lot of weak hands have gotten shooken out.
Yep.
We've had some really good. We just had a really good press conference in the United States Senate. So I mean, like always, our outlook is fucking bullish, right?
Yeah, we'll get to that hearing in a little bit. But so I was kind of curious because, like you said, Metcalfe's law. The more of these corrections that I go through, the more I think it might be accurate to, to forecast cryptocurrency as a sort of, I don't know if exponential is the right term.
It is, no, 100% it's exponential. That's why a lot of these pundits and a lot of these institutional types on TV will never understand the moves, because this is not a stock, right? You don't need a stockbroker. This is you don't need a stockbroker to get a telephone, right? And as soon as someone puts a telephone in their house, they add to the value of their network, right? If you have one telephone in the world, it's useless. If only one person has Bitcoin, it's useless. You start onboarding people, and each new user makes the value of that network move exponentially, right? So you're going to get these huge moves.
Also, too, I think the fact that it's hard to describe, right? So traditional media, it's, just going back to 1992, 1995, when they were trying to describe the internet and email.
It's the same movie all over again.
Right. Yeah. So it's very hard, difficult to describe, and it pushes viewers away. I'm sure they know they can sit on there and describe Bitcoin over 1 hour or 30 minutes, but they'll just see their viewer count drop.
Not if they talk about price. They
get
a lot of clicks. If they start going into the mechanics.
And that's what they do. And they also know what is the easiest thing about this to draw in viewers. Well, when the price goes crazy down or crazy up.
Yeah.
So that's the only time they're going to talk about it on traditional media. And I feel like a lot of people are getting most of their information from those sources, don't know that they're a business and they're looking at you and how you view it and when you view it as their source of income.
Well, you're talking about viewers that are still in the matrix, so to speak, right? They just eat the blue pill every day for breakfast, lunch, and dinner. Yeah.
Yeah, it does make me think that, and this is something that I've noticed, especially during the last year, as I've kind of focused more on price of cryptocurrency, is that there is kind of that natural tendency for humans to follow the hype cycle, whether it's news, whether it's prices. You can even say that there are metaphors within music, right? You have a song that starts off slowly, it hits a crescendo, so to speak.
We're all in a global dance. Some of us are just very out of tune, right?
Yeah.
Some of us are offbeat.
Life is a dance.
So I am curious, before we move on to the next topic, topic. When it comes to Bitcoin and cryptocurrency, people, when they talk about cryptocurrency prices, obviously they focus on Bitcoin. And I'm curious if you guys think with the scaling issues, now granted, the scaling issues have not been as bad, I guess you could say, the last week or two, because things have cooled off, right? So there's less people trying to use the network, which means the transaction fees are going down, confirmation times going down. But I'm curious if it continues to have scaling issues during 2018. Do you see that creating a significant downward pressure, not just on Bitcoin's price, but on the price of other cryptocurrencies?
No. Bitcoin will always have, for the entire life. And I was actually listening to Andreas talk about this, and it's good to get his perspective on the history of the internet. And he was talking about how the internet has always failed to scale because the goalposts keep moving. So before, they had basically a Usenet application. That was basically the first internet chat application that basically only extreme nerds like Andreas Antonopoulos and academics around the world could basically communicate on. Then it got to a point where it couldn't handle all the traffic and they had to scale it, right? And they moved to email. And then email got so much, usage, they needed to scale that, right? And then we needed online video and, attachments to email, and that we needed to scale that. So at every point there will be these, as people use it more and more, there will be these, so to speak, these
choke points.
Choke points, right? Where the current system can't handle the amount of load it's taking on, but that's where the engineers come in, and they start solving these problems. Right. And he was talking about how the internet has basically failed to scale the entire time, yet has scaled.
Yes.
So what we're seeing right now is, you look at the discussion around Lightning Network or Bitcoin Cash, people on both sides are just basically hating on their scaling solution it's just the beginning. And we'll see these things worked out. Multiple engineering teams work on different solutions, and there will be a winner or maybe multiple winners, multiple types of scaling implementations, right? We have Casper on Ethereum. Yep. So this will always be, when you're on the bleeding edge of tech, there will always be these issues, right? That's never going away. As long as Bitcoin is alive, there will always be these scaling issues, and yet people will be talking about scaling issues when Bitcoin's $3 million a coin, right? And they'll be like, it's not or whatever. There's these problems. Well, yeah, that's where engineers come in and fix it, or the market kind of readjusts. You're using too many network resources.
It's a negative feedback system where if there's scaling issues, then just less people will use it.
Exactly.
And then you'll have less
get away, and it gives
issues.
the engineers time to reload, revamp, re-engineer some things, and try some things out.
Do you guys think that your average institutional investor knows anything about these scaling issues? Or?
Well, the average?
Yeah.
Not really.
Whoever's
but people, the people that have been covering the space, and some of the I've read some material put out by investment banks, and they are very much aware of Lightning Network, on-chain scale, the debate between on-chain versus off-chain. They don't really have a say in the debate because they're just doing their jobs as financial. They're smart guys, kind of looking in, kind of how I'm not an engineer. I don't know how to scale these systems, but I can kind of summarize and
when you
think about how they are talking about it and give my opinion on it.
Institutional investors, I mean, these guys, they know how to ask questions. They know how to figure out.
They're smart.
They're smart guys. They might not be experts in anything, but they know how to get smart real quick. Mm-hmm. Like if you think, they're going to trust millions, tens of millions to idiots or guys who can't figure out something as simple as scaling for coins, like you're mistaken. Those guys are on top of it. They can figure out how to smuggle camels from South Africa to Europe. You know what I mean?
Right.
Is that something you've been thinking about recently?
No, I saw a documentary where a guy, he was a trader, and then he just I want to do real trader, and he just went and did stuff
real goods and services.
Yeah, and he just did stuff like that. And it was
he just liked smuggling. What?
Well, he wasn't smuggling, but he actually moved some camels from South Africa to Egypt, and he already worked in the profit, and then he's doing wine from South Africa to I think
Han Solo.
He sold some rafts from Mexico in China, bulk sell. He did a couple of them. Some worked out, some didn't. But
that is an actual trader.
Trading is a mindset.
Yeah,
you got to be. You got to be all into it.
Yep.
Yeah, I guess if even if you're not the most technologically knowledgeable person, if you have billions of dollars, that are on your shoulders, and all of a sudden you'll find yourself doing the research, right? There's enough incentive.
If you have the incentive.
Yeah, exactly.
The interest.
I'd also like to add the previous wave. It brought in a lot of low information, low knowledge buyers, but it also, this wave will keep a certain percentage of those people that are actually intellectually interested in technology, economics, finance, just basically what's going on in the world. And right now there's people, men and women, and boys and girls all over the world that are on their laptops or computers or phones learning about all this stuff. They just bought Bitcoin, maybe at 10,000 or 15,000, and they have the right mindset. Right.
The key thing is people over the holidays had time to actually think about it for the first time.
Like bonus money too, I feel like.
Right, bonus money. But the key thing was because we started seeing a pump at Thanksgiving, after Thanksgiving. And if you notice, like, the main issue was people just had time to digest it a little bit and, see other people coming in, watch it, and see things go up. And I think we mentioned that even before the holidays that this would probably happen. Yeah. And then after the holidays, it would die down. So for a lot of us that are in here, people that are watching, like, it might be an easy move to get in now, learn what you can, and then, take profits next holiday season, hold out, and get back in on the dip.
Yeah, it'll definitely be interesting to see whether or not the sort of January recession pattern holds true next time around, now that it's been identified as possibly an actual pattern. So I guess one last thing before we move on is that we've talked about, how would you say it, investors and investors kind of getting shook out of the markets. Mm-hmm. So I think it'll also remain to be seen whether some of the projects get shaken out as well.
Yeah.
Because I know some of them are probably holding a decent amount of their reserves in cryptocurrency. So all of a sudden they're seeing their reserves drop. And obviously I would think investment would probably drop quite a bit as well with general interest in the space.
Yeah, these drawdowns are a healthy part of capitalism. It kills the weak.
Yes.
It reveals the strong.
Yep.
Right. And we'll get more money and energy going to the strong.
Yep.
Right. And it's just how shit works. There's going to be a lot of projects exposed over time, right? They're all kind of experiments, and the strong will survive, right? And it'll play out in the marketplace. And it doesn't seem like any big projects at this time have been shown to be, naked under the covers, so to speak. Right. But we'll see. There might be some fallout that comes out of this.
Yeah, I think there will definitely be some fallout. So I guess one of the silver linings during this last week was that although the prices were going down, maybe that's an understatement. It was a very sharp drop, very, very quick. But there had been a lot of bad news, I think, the last few weeks, right? There had been some ICOs getting shut down. There's been some scams that went bust. I think China banned things in their country again. And I think there were rumors, at least, of South Korea as
According
well.
to the media, China and Korea are always banning things.
Yeah, apparently they banned it again today, which I still don't know.
That's a buy signal. Buy it.
Yeah, exactly.
Yeah. But I guess the silver lining was that actually as of today, there was a Senate hearing where obviously some people from the Senate, your regulators coming from like the SEC and CFTC, excuse me, there's a lot of abbreviations. Yeah. They talked about cryptocurrency today, and it was, in my opinion, I thought it was a pretty good hearing, and I think the general consensus among cryptocurrency advocates was that it went pretty well. So I was curious if you guys had watched it or listened to it or read articles about it.
Do you want to go on this first?
Yeah, I took I saw a lot of YouTube and Twitter snippets from it, and it definitely, from what I heard, it definitely sounded positive for most of the crypto space. The only issue was they seemed to definitely have a disliking for ICO scams. Yeah. So, which is actually a good thing because it means there's some protection there, which is, I mean, you hear about some of these ICOs and them running off, and then, I mean, it's getting so crazy.
It's at least them barking at scammers.
Right.
Right? They might not be able to protect every individual dumbass investor, right,
exactly,
that falls for this shit, but they're at least showing, hey fuckers, like, don't do some scammy bullshit, and we're going to come after you. Right?
They actually named one, it was called My my Bitcoin.
Yeah, my Bitcoin. That's
And it
right.
was like, okay,
Said it
well, then,
twice, I think.
yeah, he's going after it. It's like, okay, they actually talked about that one in particular, and I feel like for guys like us, it's probably pretty hard to scam us. Not saying it can't be scammed, but it's harder to scam guys.
We
like
get
us.
involved in better scams,
Right?
basically. Yeah.
We've already been scammed.
or get out of them in time.
Exactly.
So it's
and don't put all our money in them all at one time.
right.
Yeah.
But then when you hear about somebody and you introduce them to crypto, and then they're like, oh yeah, what about this BitConnect? One of my friends I introduced to Bitcoin. It's like, what about BitConnect? I'm like, dude, Bitcoin, Litecoin, Ether,
Just stick to
forget
the
it.
basics.
He's like, well, what about this one over here? It's like, do you want a bunch of coins or do you want some profit in the long run? So he agreed would be profit, and so he stuck with that. Hopefully, I don't know what he did with
Yeah,
his
I'd
money, but
say hopefully for sure. It's one of the scams that went bust. So one thing that I thought was on one hand it was kind of humorous, but on the other hand, I'm sure the regulators don't find it funny. Was they said something about there's been so many ICOs that have been launched, whether worldwide or within the United States. And at one point they said, do you know how many of them registered with the SEC? And of course, the answer was zero.
Yeah,
and they're like, do you know how many are planning on filing? And the answer again was zero.
Okay.
So it is kind of interesting. These regulators want people to play by their rules. But I mean, we're talking about a global market here. So if someone wants to have an ICO, I know by law, if they have like customers or investors that are in the United States, they're supposed to file with the SEC or something like that. Right. But I mean, these ICOs, this is global currency. Like if you start an ICO somewhere outside the United States, these regulators can talk a big game, but it's going to be an uphill battle for them to crack down on any of those ICOs.
100%. But their job is to protect U.S. citizens and U.S. investors. Right. So if they can kind of minimize that, they've done their job. They can't stop really, really committed people that want to involve themselves in Ponzi schemes and scams or ICOs. But if they are able to curtail, just this flowering of, their coins, but at the end of the day, they're really securities of a underlying company. Because what Satoshi did from the onset was to develop a protocol that he didn't control, and there was no money behind and couldn't be shut down. So if you have a company and you're pumping a coin, right, and there's really it seems to be a wink, wink, nudge, nudge, legal semantics about, what it is, they're going to consider it a security. And, I'm not a big fan of the SEC, but, I also don't have any ill will towards them. And I think they're just adults trying to do their job.
I think that one of the best things they can do is be crypto friendly, have the biggest crypto companies here, kind of like with the internet companies.
I think they see that. Yeah. I've personally watched a lot of C-SPAN.
Yeah.
Because I'm a huge fucking nerd, right? I've actually watched like Senate hearings and House hearings, and they're usually pretty reasonable. There's always like one senator that wants to make a point for his pet issue that can go on like Fox News or MSNBC or whatnot.
Oh, there was one in this hearing as well.
Which one in particular you're talking about?
Elizabeth Warren.
Warren, of course. She always changes. She's notorious for like just changing the subject and talking about what she wants to talk about. Yeah. But I thought it was an incredible day for cryptocurrency and an incredible day for the U.S. government really getting behind this technological revolution. And they're really, it seems like to me, the U.S. is at the forefront, U.S. and Japan probably, in terms of most forward-thinking nation states on cryptocurrency. Right. And the CFTC chairman, I believe, Giancarlo, that everyone in crypto loves now, he had some great lines about how none of the, all this blockchain stuff, distributed ledger wouldn't exist without Bitcoin, which was a big win for people in Bitcoin. Or like, listen, you guys are pumping all this blockchain stuff. I mean, if Bitcoin doesn't work, none of this other stuff is going to work either.
Exactly.
And you also had a recognition that young people, especially the technologically aware young people, are very, very excited about this, and they don't want to tamp down that excitement because they don't necessarily understand it. Yeah. And there was also a point, there was also a political star, which was Mark Warner, Senator Mark Warner. He's a Democrat, and he was very complimentary of cryptocurrencies and technology in general. And it's no coincidence that he actually has a background in technology, telecommunications, and venture capital. So, yes, a win for the United States, a win for us who live in the United States, and a win for crypto all the way around. It was a orderly, C-SPAN filmed event. Pretty boring for the average person, but for crypto people, it was a very bullish meeting between adults that really aren't pumping anything. They're just talking about technology and regulation and whatnot, what they're going to stamp down on, and they're really not going to come after Bitcoin. So all these people that think that these nation states or banks are going to crack down on this stuff, it's not in the political will, and it's not even in any of their internal memos, right, or anything that we've seen. And we've talked on this show about some of the good things that central bankers have put out in academic journals, right? So the U.S. is really at the forefront, and I'm happy to see it as a citizen, right?
So I am curious, Tay, because I already asked Brett this earlier, but if you see a bunch of politicians in some sort of Senate hearing, they're talking about maybe how they're friendly towards cryptocurrency, is there a risk there that they're just saying that because they're on camera? Do you think there's a concern that they could say one thing in public but then go around and do a different thing behind closed doors?
They can definitely do that because it's a lot of money at stake, right? And it's wild. It's not funneled through their hands just yet.
Yeah.
So anything they basically give people free reign. All right, go out there, do your thing. We want to generate this excitement, and then as time goes on, well, hold up, I need you to stop doing this. I need you to stop doing that. It has to come through these lanes.
Right.
So overall, we know what the government, they're in the business of taxing the citizens, and tax can come in all different types of forms. So whenever we got a new source of income that's not getting taxed or not, under any tax law just yet, a lot of times they will let that industry develop and grow. And then they be like, okay, now it's time, you played around enough. Now it's time to actually pay. All right. Just like you will with a child that's growing, it makes mistakes. You don't spank its butt until it's, 6, 7 years old, maybe, which is understandable. And it's going to be interesting. Just like the internet back in the day, there was no rules. I mean, even on Navy ships, people would download all kind of stuff early on when it came out. And then it was like, okay, now there's rules. All right, you gotta do this. You can't do this. You can't plug in things to the computer, which is all understandable because those are protective measures you need to take as an industry develops. So same thing will happen here.
Yeah, I think that's a good metaphor because obviously there are a lot of analogies between the internet and cryptocurrency, which some people call the internet of money. I guess, when you look hindsight 2020, it seems like the United States government probably did take the right approach toward the internet because the internet was more or less, I'm going to say, actually was invented in the United States, right?
I mean, the military or the military industrial complex and the academics in the United States had a big role to play in the development of the internet.
Yeah.
And it was kind of
bequeathed
onto the world. The private sector took it on. Built their own, built the internet as we know it and the web, got away with intranets, and the U.S. has always been a land of entrepreneurs and risk takers and technologists, and we're from what I could tell from this hearing, we're still in the lead again. And that's great news.
Yeah, by letting the internet grow, we've ended up with a bunch of the world's largest companies supplying some of the biggest jobs or number of jobs.
I'm
and
sure
they're
they
all,
like those
they're
tax
all
receipts too.
Yeah. So it can definitely end up being a win-win. Hopefully they realize that.
Yeah, I mean I think it happens with a lot of industries, and I always like going back to the car analogy. But early on, there was no seatbelts, there was no turn signals, there was no horns.
Nope.
And then
polluting everywhere.
And then all those things became mandatory. Airbags, side airbags, crumple zones. You know what I mean? We're still, making rules for cars as they get smarter, faster, burn less fuel, all of that.
Yeah, no. So one of the things that I think one of the, I don't know if they're congressmen or they're called honorables, but I don't know what kind of title that is.
Like the chairman of the CFTC.
That's what it must be.
Honorables.
But there was one point where they were talking about how their kids are really excited about cryptocurrency.
Yep.
I thought that was kind of a good, maybe a peek into what it's like in the life of a regulator.
Yeah, that was an awesome clip for anyone to watch, where the CFTC chairman was talking about how we don't want to be in the business of shutting this down for the next generation. The next generation is all into this. They are excited about it, and they want to invest, and they don't see themselves in the position of trying to stop that. What they do see themselves in the position of stopping are straight up scams or selling a security and not really saying it's a security, right? And going through this legalese and not registering. If you're not creating a decentralized network, right, and you just have a company that has a coin that, you wink, wink, nudge, nudge, this is, they're going to come after you. Yep. And I think, to me, that's fine. What Satoshi did was work around that. So if you're not working around that, and you're not working around that, and you still don't want to play by the old rules, well, you're going to get crushed, and you're not really adding much value anyways. Yeah. So it's all good on my end. But that was a great part, and I think they covered that a few times about how the youth, and when I say youth, millennials or 20, 30s, people that are technologically aware and active are excited, and they don't want to tamp down that enthusiasm at all.
Yeah, so this is, I guess, a little bit, maybe not quite a tangent, but one concern that I heard them bring up multiple times was not just money laundering that individuals or businesses are doing, but money laundering by people trying to avoid sanctions. So I think there was some concern by them. The whole time they were talking about that, I was just thinking of North Korea, because I feel like that's
Russia.
The elephant, right? Those are like Venezuela. The elephants in the room. So I'm curious, do you guys think... is that a legitimate reason to crack down on cryptocurrency? That there are governments somewhere that the United States government doesn't like, and they're using cryptocurrency to avoid sanctions? And maybe, I guess, the other part of the question would be, is there anything that the community should be doing to help one side with this, or no? Or
I think the flip side is the government, or I should say, the internet and cryptocurrencies could be used as a tool to uplift citizens in Venezuela and North Korea indirectly, right? So I think it would be, destructive on many fronts if that was the reason why they cracked down on that. It just, in my opinion, and these are all lawyers, so they're lawyers and politicians, so they're paid to ask questions, so to speak, and this is just as a politician of a major nation state, right? You want to that has traditionally deployed sanctions on some of its, I don't know, rivals, but geopolitical adversaries. I would say it's a natural concern, but it didn't. It definitely didn't make headlines, and I don't think it's it's something they can do much about. And I think it's, like I said before, the internet and cryptocurrencies are a tool to uplift people out of North Korea or Venezuela, or if you think of Russia as a backwards nation state.
Right. I mean, I hope that the government actually uses true discretion with that. I mean, if they're actually going after state money launderers or, any type of nefarious groups that are doing something, that's a clear distinction from the everyday user, investor, and all that. So, it's not even if they want to do that and they see a reason for it, hopefully it's the right reasons, is for all that. But as soon as they start coming after regular people, if they come after regular people and they're inciting that, then we know we got a problem. But that hasn't happened, and hopefully that won't happen.
And all these guys are about striking a balance. That's what the regulators are all about. And especially, in the United States, a free market is kind of a generally a good term, and regulators are, they're kind of just watching out over markets, right. And they want to be precise in their movements. And even if they might be targeting a country for sanctions, I don't think they're going to try to shut down a decentralized network. I don't see that happening.
back on topic, if you don't mind. I think one of the things that I noticed was these regulators, when they were discussing protecting investors. I noticed that they didn't say anything about protecting about protecting businesses. So if there was not much of an emphasis on, hey, okay, these people want to start up. Like if someone wants to do an ICO, the companies are setting up shop in the United States. I did notice there was, I'm trying to protect Main Street. I'm trying to protect Main Street, but there was not much of a reference to to protecting businesses at all. Like that's not in there.
I feel because the SEC's
businesses don't vote as much. Maybe I don't know.
Well, no, I think there are departments that, like the Department of Commerce, would be focused on business, but the SEC is specifically focused on markets and investors.
Right.
And I think what they're worried about in terms of Bitcoin and digital currencies are the small retail investors that really have no idea what the hell's going on, and they want to protect them.
Yeah.
So mommy and daddy kind of stepping in and tamping down all the irrational exuberance.
For those of ye out there enjoying the show, your captain would love to get some feedback on how best to improve it. You can find me on Twitter as Captain Crypto HD, and on most of the high seas of social media as either Captain Crypto or Captain Crypto Show. Just be on the lookout for my logo. Also, be aware that due to the technical aspects of each platform, that my podcast feed will always have the most up-to-date and latest revisions of each episode. So if you're enjoying this episode, feel free to give your old captain a review on iTunes and share this episode with the rest of your crew. Now, back to the show.
So one of the more recent, events or conferences that has occurred was not quite as much cryptocurrency related, but that was the World
Economic Forum.
World Economic Forum. And this looked like it was one of the big events where all the big wigs, all the presidents, prime ministers are showing up. I know Trump was there. Our CEO, Paul Pui, at Edge was there as well. I think he was giving a talk. But I don't pay too close attention to these conferences. But Brett, I know you said that you did, and you're going to kind of give us a little bit of an overview of some of the highlights that you got out of the World Economic Forum.
Yeah, I think I ended up watching like 4 or 5 hours worth of different talks. And, because I come from finance and economics, so I still have I don't have a tech background, but I like to keep my foot in both the traditional markets, not necessarily, I don't have my money in there anymore, and one foot in crypto. And I do that partly because, it was a significant part of my life, kind of led me to crypto, and crypto is also nested in within this larger narrative that's going on in the financial system, right? Bitcoin wasn't born in a vacuum. It was born for a specific reason, and it was born at a specific time in history. And one of the key takeaways I got, there was a few of them, but the history seemed to start, especially for a lot of the people at World Economic Forum in 2008. It was a very significant time in financial and economic history with financial meltdowns. Basically the whole system was melting down, and there need to be emergency measures put into place to kind of stabilize the entire system. And from listening to what professors, CEOs, investors, central bankers had to say, it seemed everyone was in agreement that we have embarked on a monetary experiment that the world has never seen before. And this is really the easy first part of it, where interest rates have been suppressed to such a point where it's basically the interest rates are either zero or negative for sovereign bonds or lending between banks and lending between central banks and banks.
When you say experiment, are you referring to cryptocurrency?
No,
or
I'm talking
capitalism?
about I'm talking about what central banks all over the world have been doing for the last 10 years. And this is part of the reason for the rise of especially Bitcoin. And then Bitcoin was the reason for the rise of other cryptocurrencies.
Right.
But basically what central banks have done is the best way to put it is they print a lot of money for people. They get into their academic speak, talking about different tools and quantitative easing. But at the end of the day, they're printing money, feeding it to the banks, and a lot of it kind of gets fed back into stocks, bonds, and whatever. It doesn't really percolate out into the rest of the economy. And they seem to be in agreement that a lot of the gains that have been happening in the stock market, bond market, most of the gains have been due to the suppression of interest rates, easy money. And the hard part going forward is going to be unwinding these positions. And when I say unwinding these positions is raising interest rates. And why is that an issue? It's good. Raising interest rates is good for savers, but what the Federal Reserve and other central banks have done I'm going to go into a little technical talk, but they've basically stretched the duration of assets in the sense that they've made them more sensitive to interest rate moves. So whenever if anyone out there has ever done some bond math, right? Bonds are usually, you get a certain coupon rate, a certain interest rate. If you have a 30-year bond or a 1-year bond, the 30-year bond is going to be much more sensitive in terms of its returns to interest rate moves. So what central banks have done is elongated the average duration of assets, really, and what that means is kick the can down the road. And when they need to stop the easy money, there's going to be a massive correction in not only bonds but equities. And the issue that they have is how are we going to unwind this? Right? They've been liquoring the traditional financial markets up with easy money, right? Money that basically comes out of thin air. So it's something like Bitcoin. People that produce the money have to work for it. They have to expend energy. Right. In the traditional financial system, it's just a ledger entry. Yeah. There's no cost to it. So they just basically pump more money into the system, and the people that are closest to that pumping of money get the money, and then they put it back into the stock market or the bond market or whatever. And there was actually an interesting point, I should say, an interesting part of one of the panels where the head of asset management for JP Morgan was basically thanking all the central bankers for everything they've done for shareholders, right? Because all of this economic growth, and it's not really economic growth, it's basically growth of GDP at a very small rate, and the GDP doesn't really percolate out to all corners of the economy. All of the gains over the last 10 years have really been to shareholders, and shareholders basically people that own equities. It's a very small percentage of the developed population, right? 50% of the population probably doesn't even own stocks, and the ones that do, almost most of it is owned by a very small percentage of people, and all the returns that we've seen have basically all gone to the same group of people.
And even if you hold them, you better be prepared for when they pull out, because they're going to know they're going to be protected.
That's right. And there was, I wrote down some notes here as well. And you could also, one of the things that came up was Bitcoin and cryptocurrencies and blockchain. And the discussion it was pretty predictable, where venture capitalists, investors, technologists were very bullish on Bitcoin and seemed to have a good understanding of it. And then the central bankers, professors, economists really didn't have much of a grasp on it, but they think they like blockchain, right? So you could tell that they haven't read much about it, but they have some advisor that tells them exactly to say. So we've seen this huge drawdown in cryptocurrency, and the stock market just had a massive drawdown the other day, and the stock market has done fantastically all through Obama's administration and the Trump administration. And for anyone that thinks it's either of their wonderful policies, pretty much everyone at the World Economic Forum disagreed, especially some of the serious thinkers, and a lot of it has to do with just interest rate suppression of interest rates and stock repurchases. Right. So that basically is just it's an accounting trick. That's all. There's not a lot of real dynamic growth going on in that, and they know it.
What?
And they're trying to figure out how the hell do we unwind from this thing? Because we've got the whole party liquored up, and everyone's going to have a huge hangover unless we just keep giving them liquor, right? And they don't know. They're kind of in a tough spot right now. You can't have interest rates at 0 or negative forever.
I think I think a lot of the smart people, economists and all that, they really overthink they're trained to overthink the whole financial system. But it really is cycles. Like we know it goes up and then it comes down. And then it goes up higher than it ever went before. And then it comes down. And then it goes up higher than it ever went before. And it comes down. These cycles might take 8, 10, 12 years. But we know they're going to happen. So like doesn't matter who the president is. Doesn't matter long as there's the United States of America, that has been happening. Like that's part of our heartbeat. That is our pulse. That this thing goes up and comes down. Now people think that, if this is the crash that's going to end it all, like I almost think that's just as naive as thinking a week ago that it was going to go up to 40,000 on the Dow. You know what I mean? Like it's going to crash, bubble, whatever. They love those words because then it just makes it even faster and more dynamic, more violent. And then we come in, if you're smart, you come in and you buy.
Some good value, yeah.
And then it just goes back up. Like it really is that simple. But people, if you're trapped up in the consumer vortex, you're not going to notice any trends over 10 years because you're living day to day, week to week max, and you just get soaked up in it. And that happened 10 years ago. Like that didn't have any correlation to me today.
Yeah.
All right, sure it does.
And something else I noticed as well is there was a lot of I don't know. Right. And they seem to be perplexed about how things have played out, especially politically, like in the United States with Trump and then like Brexit and some other movements around the world. If you're looking to them for any guidance on what's happening, they don't fucking know either.
I could tell you how to get the
guidance. They
guidance.
have no idea.
Do the opposite of what they suggest, probably, and you're probably better off.
Probably. Yeah.
Exact opposite.
Yeah. There was a lot of self-congratulatory talk there, especially among the central bankers, because basically markets have gone through the roof since they've embarked on this experiment. But there were some good comments on there and something I was thinking, this is the easy part. The easy part is giving everyone what they want, and what they want is free money.
Right.
And yet we all know there's no free lunch. And the hard part is raising interest rates, because they control the price of money, and what they basically engage in is price fixing to manipulate things to go the direction they want it to go, and they want to stabilize these banks that are bankrupt. They're bankrupt by their business model, and these central banks exist explicitly to bail these institutions out and these markets out. And when they run out of tools, it's going to be an ugly day for markets. And the crypto market can take a 50-40% drawdown. People don't really have their life savings put into it. It only affects a small group of people. There are pensions, public and private endowments, all types of stuff that is dependent on a stock market and bond market that just keeps going up.
Right.
And we know from physics, everything that goes up must come down. And it's going to be very, very difficult for them to The key is it's going to be very difficult for them to unwind, and that's part of the reason why I moved into crypto. Right. This experiment really ticked me off as a young investor. We were talking about exponentials the other day, and this is something Einstein talked about, was the power of compounding interest. It's really an exponential function. That's why it's so powerful. Right. Over time, it really feeds on itself. Yep. And when you suppress interest rates, you really, really suppress savers' ability to expose themselves to exponentials. So that's something, as a saver, not really a consumer and a young person, I'm looking to get out of that. I don't want 0% interest rates. I want to expose myself to exponentials, and that's something that Bitcoin does for me.
Exactly. Like it's funny. Like I was actually having this conversation with my mom today, and she was like, "I wish I had started looking at some of these things earlier, like how to." I mean, she invests and all that, but like how to look at and think about bigger numbers in the future, like not thinking about what you have in your expendable income today
right now.
Right.
Yeah.
But I was like,
it's all about future orientation.
right. So like, you think like, okay, all I have is say $10, but if I had 100, what could I do? A lot of people, because they don't have that 100 or that 10,000 or that 100,000, they won't think as a person that has that 100,000. But that's the biggest mistake right there.
You have to start thinking like that immediately.
Even if you only have $1, because it's like, all right, once I get to $1,000, I can do this. All right, now, and the funny part about it is the exponential thing you talked about. So like compounding interest, like 5%.
It's
so
the most powerful force in the universe. Right. Einstein said that.
It's funny because you can do it on your iPhone calculator. Just pull up and do whatever number you want, and then times or plus 5%.
And you see how explosive that is.
Right, and then you do it plus 5%. And you can kind of gauge in your head how it's going to be up to the time you do it 5 times. After you do it 5 times, it doesn't make sense anymore how much it's going up. Like, it's just like, okay, what is going on with this number?
Orders of magnitude.
Right.
Yeah.
And what's dangerous is central banks have really suppressed that, especially in the just like with CDs, what is it? What is a CD? A certificate of deposit,
yeah.
Right? Traditionally, they've been like 5 to 10% or even 15%,
right?
Where you're actually getting some yield on your money,
right?
And you don't have to invest in a stock, which is, a risky play.
Right.
So, and they've done this on purpose to push people into the stock market, right? Or push them into riskier assets, prop up asset bubbles, and really suppress that compounding interest for young savers like me, right? And it's gonna be ugly once they start unwinding all this stuff, and there's going to be radical repricings of a lot of traditional assets in our lifetime. They can keep it going for a long time because that's where a lot of the bearish people miss the
timing is difficult.
Just the sheer weight of their resources, or the amount of resources they have, and people just want to ride the wave, right? So they're going to get a lot of people. They don't necessarily care about what the Fed's doing, but they want to ride that wave up with them, and hopefully get out. Right? It's like, a lot of people don't mind Ponzi as long as they can get in and get out.
Yeah, big
right. Right, so we have these Ponzi-like mechanisms within our own traditional financial system. And then I had one more thought to finish it off from the World Economic Forum, and that was their conception of money compared to people in crypto, right, and what we kind of harp on. So the central bankers there, it really, they are really focused on keeping money, or they think of money or currency as something that stays stable for consumption, for consumer payments, right? That's what they're really focused. They want the consumer, because they
stable coin.
Yeah, they view the consumer as the driver of a lot of these economies, and something like the U.S. is consumer focused. So we've really gone away from a producing, saving type society to a consumption type society. And you can see that illustrated through how central banks talk about money. And one of their key problems with Bitcoin is because of its volatility in consumer payments, which to me, I don't give a shit about that, right? I want to make sure my value either keeps its value over time or compound or grows over time. I don't give a shit that I go into McDonald's, right? And I shouldn't say I don't give a shit. It's a low on my priority, but on priority list. But on theirs, they want stable and manageable decay, barely noticeable decay over time, right? They have these inflation targets that they want the population to be barely noticing them, and it creates an incentive to spend, whether or not the population knows it or not. And that spending, basically, since they view the economy as a car, it's like a fuel. They think of money as a fuel to a car.
Yes. Do you think that's because of tax? Like the consumption is taxed, and that's how they get a lot of their, tax revenue? Or why do you think they focus so much on consumption then?
I think it's much deeper than that. I think they're hyper focused on equilibrium and stability, and when you do that, you can
make it worse.
You can make a lot of shit worse, especially if your goal is growth. So they always talk about growth, yet they're always trying to keep the equilibrium pretty much the same, right? And you can't have, even in your own life, you need to be out of, a growth stage is where you're kind of out of
your element.
equilibrium, right? You're out of your comfort zone. And something they didn't allow that in 2008, because 2008 would have been even more of a shit show.
Right.
They wanted to keep that equilibrium, keep that current power structure, that current financial system intact, right? That's what they saw as their primary, and the central bankers see themselves as the saviors, because everything else broke down, and they were the lender of last resort, which is exactly what they're intended to be, and that's the role they played.
Yeah.
So what we get is a dramatic reduction in purchasing power and the continual decay of fiat currencies over time, but they're okay with that as long as the consumer doesn't really notice it and there isn't much volatility day to day for their purchases of
Candy bars.
or
That's what I care about.
underwear or whatever. Like really, that was one of the key insights I got from a few of the central bankers. Part of the reason they don't like Bitcoin is because it's too volatile for consumer payments. And when you have a country that's modeled on consumerism, and you want they kind of view it as some great machine that they're fueling up with more money.
I see it myself as I guess you can see it as a machine, but I see it as
I don't see it as a machine. I'm talking about what I do not. I reject that completely. I think the economy is more of an organic entity.
I see it as an animal.
Exactly. We're on the same page here. Right. They see it as some machine that they're pulling levers on. Right. Because they're at the top of the pyramid. Right. So they view money as a fuel to this great machine. And I'm like, that is not money to me.
I will say that
it doesn't fuel shit. Right.
I think America, the United States of America, is like the heart that pumps all the time. Like you bring something here. If a business is in the world and they're not doing business in America, they're amateur hour. They really are. If you're a car maker and you don't sell cars here,
you're probably making a shitty product.
Yeah. Exactly. Yeah. Like you might be making a great product, but you're not a good business. You know what I mean? So it's with anything. It doesn't matter what it is. If you can't penetrate the U.S. market, you're not dealing with real money. Mm-hmm. You know what I mean?
Gotcha.
Yeah, I mean, it's the biggest market, probably with the most money. I am curious what you guys think. We've been talking, I think, kind of the metaphors. People have different metaphors, but with interest rates and even with the debt, I've always kind of seen it as a little bit of like a slingshot, and they keep on pulling back harder and harder, right, and longer, and it hasn't snapped back yet, so they think everything's fine.
Yes.
But the harder that you, and the longer that you pull it back, the harder it snaps back. So go ahead.
The longer you try to keep equilibrium in your life or whatever, the more drastic the disequilibrium is going to be.
Right.
So these things will just come out of nowhere. So instead of having a 25% drawdown 8 years ago, you have a 50% drawdown 10 years later, or something even more devastating. So they constantly put out fires that are healthy for the economic forest.
I mean, we see the same thing in Bitcoin. It just happens a lot faster and comes back faster.
I mean, things die in Bitcoin, right? Yeah. It's a pure, organic, like you're saying, that's how we view it, and how a lot of cryptocurrency people view it.
It recovers.
That's why I wanted to talk about their view and how they're seeing it.
Right.
They view money as something that is a fuel for payments.
Right.
Right. We're looking at it as, no, this is my savings,
right,
and I want to compound that savings,
right,
and and not only keep my purchasing power, but have that shit raised up.
Exactly.
They don't see that at all. They don't want that at all. And if they have that, it really destroys the whole structure of the system. Is, that's why a lot of the economists, they hate deflationary currencies, because they're right. They would destroy the current economic model that we have, which is basically rampant consumerism. It's not based on savings and production. It's basically how much can U.S. consumers consume, and how much can we get them to consume. That's the model. Right. And you bring in a currency that actually keeps its value. People don't want to spend. Right. And they're right. It does break down. We have a whole new society that isn't structured around rampant buying and selling of worthless shit. Right. They want to keep that shit going.
Yeah. I mean, there's definitely incentive to maintain control over the masses. You know what I mean?
100%.
If we had the option here, us three ourselves, to control, we probably would. You know what I mean? If we're controlling, all right, we're doing whatever we want.
I don't know. I'm a really good person,
Yeah, all right, we'll see.
I'm a social justice warrior.
We'll see when the mic's off what he says.
I'm a virtue signaler.
There you go. So I guess one of the big questions, and no one really knows, but this recent correction the last couple of days of not cryptocurrency, but the traditional markets, does that bode well for cryptocurrency, or are the two, do you think, not affected? Or do you think people, if it gets bad enough, they'll run out of the traditional financial market?
I believe the traditional markets right now, I heard one opinion on it earlier today, and they were saying that a lot of the crypto income, a lot of people are coming from traditional markets with gains they've had from traditional markets coming into crypto. Obviously,
And they know a lot of those gains are fluff.
right.
Right? They know a lot, and they
Well,
want to park it somewhere else.
maybe they do, maybe they don't, but they want better gains. You know what I mean? Because they've been
They always
holding,
want more,
yeah,
right? You want that
it's-
dopamine spike.
Everybody does, you know what I mean? So like there's that opportunity going on. But I will say, like, if the markets fail, I don't think it's going to be an immediate thing where people just run into, like, big money just automatically runs into crypto immediately. I think it'll be interesting because now we actually have this as an option. It's possible, but it could be a delayed effect. I still think we got a ways to go on the Dow before it's a true crash. I mean, because we were at 26 and then we just came back to 24. I mean, it went from 24 or 23 to almost 27,000 in 2 months. It was going up like a crypto. You know what I mean? The Dow Jones was going up like a coin.
You know, it's also interesting, some parallels between crypto and the traditional markets. I've seen a lot of the people that hate Bitcoin really something that they would jump on is the story with Tether and Bitfinex, right? And basically the accusation is they print money to pump up the price. And that's literally the exact model.
Man,
They're
you can't-
literally
you
the
can't
exact model of what central banks and these professors and you know, these luminaries of the traditional financial system.
They don't believe you. They don't believe you. They
Right.
think
It's
it's
literally
back.
the same exact model. So, and I'm totally, you know, I don't know if that's true or not, whether Tether and Bitfinex is doing it. It's hard to know. If they are doing it, you know, obviously it's something that I would want to know about and get rid of. Just like I don't want it in the traditional
Well, I mean,
financial system.
It goes back to the whole, like, when you first explain somebody Bitcoin and they're like, well, what's it backed by? What's the dollar backed by?
Yeah.
They don't know.
You keep-
you know what I mean? Like,
it's backed by you not thinking about it.
Exactly.
That's what it's backed by. Yeah.
and if you're arguing with somebody at that level, like, they already, like, basically you're arguing with their ego because,
And their identity.
right, they don't want to,
that's a big part of it. Yeah.
and that's what it is.
Well, I saw that, you know, some of the animus towards Bitcoin and cryptocurrencies is that it's literally Bitcoin is literally is explicitly anti-Krugman, anti-central bankers, right? We automate the process of central banking,
Right.
settlement,
Inflation,
inflation cycle. We're basically like, you guys are ruining shit. We don't want you guys. No one knows exactly what the right rate of money creation is. What is important is that everyone agrees to it beforehand and knows about it beforehand. So it's basically like knowing the rules of the game before you play it,
Yeah.
right? Where in the traditional, you don't. The rule book is always changing. The ledger is always changing. The supply is always changing, and you have no way of knowing which. You just kind of get hints and statements from central banks on what they're not going to do, and
Right.
and they don't always. You know, they're not always. Let's just say, they don't always honor their word, right? They say things like data dependent, which basically means this shit's about to fall off a cliff at any moment. We need to keep this shit pumping. That's what it means in central bank. But you know, they're going to say they're data dependent. They're looking at models, right? And they're basically being like, we got this. You know, we need to have discretion over this.
Right.
And cryptocurrency is basically like, nah,
Right.
we don't want any of that bullshit anymore, right? That's one of the big reasons I got into Bitcoin. Right, it's one of the biggest reasons I got into Bitcoin is I don't want a central banker or professor touching the supply schedule of it, right? Or a bank, right? I want to know the rules beforehand. I want to know the supply schedule, and you adjust accordingly,
Right.
right? And when cryptocurrencies come on the scene, naturally these economists, central bankers, and professors are going to push back because it's literally a direct attack on their professional identity and everything they've learned, right? So you're like.
They got too much invested
yeah.
in this scheme.
They're really not attacking Bitcoin. They're defending themselves.
Exactly.
right? So you get this, defending their ego, right? You're arguing with their ego. Like someone like Paul Krugman or Joseph Stiglitz.
I've been a professor for 30 years. What are you going to tell me about this that I don't know what I'm talking about?
And now you have all these, smart asses like me that are like, fuck you, dude. Yeah. Like, I don't listen to you. I don't think you're that smart.
Right.
And I don't want you touching my money.
Right. Yeah, and your system is dying.
Yeah, exactly.
Could you imagine? I just got to take it back to this example. But you imagine people who were trained their whole lives and they were trained by their fathers and uncles or whoever to wield a sword and how to, properly defend themselves with a sword.
The horse with the car. Like the people that were breeding horses and they're like, what the fuck are you using this car for?
A guy comes out with a gun and is like, yo, like this might be better.
But we do the karate way. We do the
Bow! Watch that.
Yeah. Damn.
Yeah, it's like you said, I think you're right that part of it is identity. When you've come to believe in a system that's part of who you are as well, you play a part in the system, and to watch it die means part of you is dying as well, maybe, or at least that's how it's perceived by some people.
Yeah. And you can feel it with yourself when people attack crypto. You feel like you're defending yourself.
Mm-hmm.
You put your right. So it's natural. They're human beings.
Yes.
But overall, you could see the intellectual differences between crypto and the traditional financial markets. And I mean, we have exponentials in our path, and they have
linear at best.
Linear at best, and they need to draw down. The only reason it's been up is because they've been engaging in price fixing and tether-like printing of money. That's basically, the world has gone through basically a decade of barely anemic growth.
It's
and
exciting.
that's really with massaging the numbers. And GDP isn't necessarily the greatest metric of a healthy society. Right?
What's crazy is we actually needed Bitcoin before people actually started getting involved.
They had no idea what was going on.
Well, none of us did. I mean, I kind of knew something about how central banks work and then the what do you call it, fractional reserve banking.
But it's opaque, complex. You don't know the vocabulary.
But now we're starting to realize things like this, the internet one, then things like Bitcoin, cryptocurrencies, you start to really get a critical eye, a critical mind on how things work.
Yep.
Are they overcomplicated? Once things are overcomplicated, it's a good sign that it's probably a fugazi.
Yeah.
Yeah.
You know what I mean?
Even the basics, it's like when people talk about currencies, it's like, okay, well, at what point does something become a currency? What is money? At what point does something become money? And since I've gotten into cryptocurrency, I think I found almost like anything can be money.
Of course,
a favor can be money, a smile, gold. There's a bunch of different things that it can be, but it just makes you question, okay, well, what are these classifications or words? What do they even mean?
They seek to limit your understanding, especially of a new technology, right? If you're trying to fit Bitcoin into your framework of a nation state issuing money, you're never going to get it, right? You really got to open your mind up, and you need to learn some new vocabulary, some new concepts, right? And kind of question everything you thought before, and just accept it as truth.
We could even look at it we talked about the cryptocurrency. We look at it as like an organism, but each one of us, we are a business, right? You have to put something in, some water, some food, burn calories to get an output. You're thinking about certain things. You gotta, you're expending energy to do those things. Actually, everything we do is a form of give and take.
A form of energy flux.
Right.
Yeah, actually, to add on to that, our current money system is completely divorced from the expenditure of energy and the production of money.
Right.
So something what Bitcoin does is link the physical world and the digital world with its proof of work mining, right? So the producers of this good, which is valuable, have to invest. They need to learn a skill set. They need to put a lot of energy on the table and convert that into coin. What we have going on, like I said before, is we have a money system where the money producers, the central banks and the international banks, they don't have to do shit.
Right.
And they get it first, and they get it basically for free.
Yep.
And you wonder why no one else is really getting rich, right?
It's a synthetic, synthetic food almost.
Right, and then it basically gets circled back into the stock market and derivatives, and basically that whole club keeps doing well while everyone else is basically stagnating. Because the only thing that really drives economic growth is not pumping money in, right? It's technological development and creativity,
Right.
which is inherently a disequilibrium process.
I guess when you distill it down, the thing that gets things done is incentive. You know what I mean?
Yes.
Like a will
Yes.
to do.
Yes.
So how are we going to make these people
Incentives and punishments.
Right. Well, how are we going to make these people do this, right? So what is better, the stick or the carrot? And a combination of the two. So obviously you can enslave people, you can threaten them for their lives or whatever, and things will get done for a limited amount of time and a limited amount of people. We know the way things get done when you're using that tactic. And then if you want to keep things going longer, and we also know normally if you have a crack in your system and you're punishing people to do a certain thing and there's a crack in your system, they're going to choke the shit out of you.
Yeah, they
first chance they get.
Yep. Yeah.
So to avoid that, you want the carrot when you can apply it to most of the people. You don't want to have most of the people under slavery because then you got a bigger body.
We need a balance of slavery. Is that what you're saying? Tim?
There always is a balance of slavery.
I know. I'm with you.
So it doesn't. I mean, I think some of the founding fathers of the United States actually said this: the best slaves are the slaves who don't know they're slaves. You know what I mean? And if you can convince people that they're not enslaved, that they got their free, whatever they can go get a hot dog down the street anytime they
there's
want.
no volatility of that hot dog. Right?
Exactly. They can do this. They can do that, and
things are stable. People.
Yeah. I'm not no
I will
slave.
say there are people that are oriented towards stability, right? And they're gonna probably seek out fiat money, that'll keep. And then there are people that seek out volatility and risk taking, and those type of people are going to gravitate towards crypto. And like we were saying before, if there's a drawdown, is it automatically going to go into crypto? That's hard to say. But
Yeah, it is hard
but
to
what
say.
is easy to say is that millennials are transfixed by Bitcoin and cryptocurrency, and they're the ones that are going to be increasing their earning power over time.
Right.
And what would have happened before is that those funds and savings would have went into the traditional markets.
Mm-hmm.
Well, now they're not going to be fed those things.
Right.
And all these old baby boomer and pensioners are not going to get that.
Well, that's gone away for the most part anyway.
Well, I'm saying it's only going to get worse.
Right.
These pension issues have just started, and that's just private pension.
I know even in the military, they were giving the guys option now. I think if you've came in the last couple of years, the 20-year retire thing is going away, and they want to basically give you a 401k.
They're doing that everywhere.
Yeah, from the jump. So it's a sign.
And that money in the future is not going to be there.
Right.
It's not. Right. Like people, I feel bad for people that think they're going to get like some nice little pension from
the rest of their life,
or from maybe a private organization or the government. Mm-hmm. But they might get, on paper what they were promised, but it's not going to buy shit.
Yeah.
Right.
That's not going to buy shit, and they're going to be struggling.
And
a lot of the smart millennial money is going to go into crypto.
Yeah, they're over it. I mean, most people I know are just completely over the stock market. Even my father. I mean, he's an older gentleman. He looks at the stock market. He's like, why would I do that?
Yeah. Basically, every valuation metric, it's way past historical norms. Stock market, bond market, real estate, derivatives, whatever.
I will say, just going back, you think about the major crashes that have happened in history, and somehow the United States, I feel like if there is a country called the United States of America, there will be a stock market. Like,
what do you mean by that?
Just because, like, if the stock market thing implodes, like, the whole fabric of the United States is gone. Like, people think, like, oh, well, United States is about this and about that. Like, we are, like I said, we pump the world's economy through corporations and businesses.
We're the pumpers and dumpers. Is that what you're saying?
Well, I'm just saying, we keep it going. We keep the
hell yeah.
And we got a military to back it up, and we do all that stuff, right?
All the dynamism is here.
Exactly. So, like, China might take that over at some point.
They copy us. They free ride.
But the thing is, I'd say
there's
the
not a lot
benefit
of creativity out there.
Not at first. Like, and it seems like that at first.
I'm doubtful of a top-down fascistic communist regime how much creativity can come out of that.
True, and that is their one problem because
take generations.
But they're able to. They have a lot of power because they have a lot of people.
But
that
the thing the Chinese
go
are doing is they're all over the place. They're in every country. Even when I went the last time I was in Germany was maybe 3 years ago. I saw a lot more Chinese people there now, and it was Wasn't a nice time of year to be there, but they were there.
They're all spending their money.
You go down to Mexico.
They're invading.
You go down to Mexico, like there's a lot more Chinese there than there was 2 years ago. You go to any, France, anywhere in Europe, there's a lot more Chinese. I'm not saying they're invading, but what I'm saying is they have opened up their
Are
doors
you sure, Alex Jones?
for a lot of people to get out there. And the government incentivizes them to go and set up businesses in other countries.
Mm-hmm.
And a lot of them are straight from the farms, the peasants, from the middle of China, and they're coming out and hearing about their former neighbors that are somewhere in West Africa that have made a fortune, and they don't care about all the stuff us as Americans care about when we go places like, oh, what about the corruption and all that? For them, they see it as an opportunity to get in. The corruption means they can pay to play.
Mm-hmm.
You feel me? So like we look at it totally different,
Yeah.
I will say we can't underestimate.
We're like corruption. They're like, this is business. What are you talking
Exactly.
about? Yeah.
Like in the U.S. we have corruption, but guess what? Like you have to have
It's
a lobbyist.
institutional.
We still have
Yeah.
that. We still have that.
It's so big.
That Puritan spirit.
It's pro league here. Everywhere else, like in third world countries, it's
At the local level.
it's at the local level. Like
You don't want to get arrested.
your
Pay up.
Your
Gotta
Bitcoin
have
can
cash.
buy you in. You know what I mean? One Bitcoin can buy you into whatever game you want to play over there, no matter what the price is of it. So it's you can't really underestimate the cultural differences and how it may play to their advantages in the future.
Yeah, I think there may be a shift in power. It'll be interesting to see whether the stock market, like the traditional stock market, will ever have cryptocurrency on it. I know they talked about ETFs in the hearing that was today, but they essentially said that there are too many issues with price discovery, custody, volatility, that those are things that they are quote-unquote uncomfortable with. One thing that you guys did kind of touch on a little bit is when it comes to like 401ks and stuff like that, there's kind of been like a subsidization of the stock market, right? Like you had the Republicans come in, they say, oh, you know what, we'll actually make it so that if you invest, like we'll give you this sort of tax break. So there's been a lot of these sorts of, I don't know what you call it, rule sets that help prop up
Well, yeah,
the,
they want
the
to push.
financial system.
They want to push money into the system.
Yeah.
And then with something like a 401k, it's locked up, right?
Yeah.
If you take it out, you get penalized, right? So as someone as a undergrad and master's in finance, and I'm no financial genius. I've never had a 401k, and I
Me
never
either.
will.
Me either.
Yeah.
And I just
Right? You're like it's a bunch of people that
it's
don't know.
BitConnect.
They're
It's
just
BitConnect.
yeah, but yeah, exactly. It is BitConnect with a government stamp on it of
Right.
approval, right? So
Yep.
it's like a little better of a Ponzi scheme. But like you get into these big pools of money. It's big pools of done money that's being managed by these asset managers that really, let's just say, they don't necessarily know exactly what they're doing either.
Right.
Like they kind of do, but like everyone's in the same pot. You can't really pull out your money without a penalty. I'm like, no. In the age of cryptocurrencies where I can whip money around the world in, a couple of minutes,
Exactly.
right?
Yeah.
And I'm not putting my money in a 401k for some asset manager to, rate me with fees and, just diversify me, right? I can do that on my own,
Right.
Yeah, I sometimes get the vibe that it's kind of like Weekend at Bernie's. Like there's all this stuff propping Bernie up.
401k is for people that don't want to think.
Exactly.
Yeah.
Exactly. Same as
That's what it's for.
a lot of
and when you
mutual
don't think
funds
you
even.
you get what you get.
Yeah. Mutual funds, same thing. I mean, they're being managed by a guy that can switch. A lot of people don't know, like they can switch managers on you. This guy could perform well, then you come in and you got a different guy. He's not performing well. They get switched the fees on you. All of this stuff, like a lot of it is not very clear, and it's
Intimidating for a lot of people, right?
Right,
All
it-
the information you get on a 401k.
And
like,
this is the thing when we talked about the age of spin before, right? Because a lot of people, the human brain has a certain amount of bandwidth. I can talk, you can talk, you could be listening, but you have to switch on and off. If a third person comes in and talks to you, you're not going to understand anything that's going on unless you're just blocking out the other two.
Yeah.
Now, if you have a person that's going to work, they got the news pumping, whether they want to lean left or right. They think they only have two sides, right? So they're going to lean either left or right, red or blue. And they believe in that, right? They're pumping one thing. They're seeing something else on the news about that's going to pump some fear mechanism in you. Those collective things are going to confuse people so much that when it comes time to think about, and not to mention, some of the diets we have that are a lot of caffeine and sugar and all these other things that make it hard for you to actually think clearly. You combine that, and then you ask somebody to think about their financial outlook on things, and they're like, and then on top of that, you put a guy in a suit, in front
on
of them
TV that's confident
that says he's an expert, and like, oh yeah, well, you have to diversify, blah blah, diversify, huh? Well, if you'd have bought just this one thing, it would have did 10 times better than the whole stock market, Or if you bought, people are just finding out about Bitcoin. Like I think one of the first podcasts we did is like, just look at the numbers. Just go on Google and look at the numbers from the past, and take 10 minutes and calculate it yourself how much you would have gained if you put in $10, $100, $1,000.
And then think about the size of the market right now relative to other financial markets.
Yep.
And then think about the potential user base,
right?
Which is basically anyone that can hold a fucking phone and has an internet connection.
Exactly.
That's it. That's the, like, you just think about those two things. Right. You don't really need to do much more analysis than that. Does it work? Where are we at right now? Yep. Where can it go? You put those three things together.
Simple, but it's too simple for a lot of people. They're like, oh no, it can't be. It's just Tay these guys talking about some crypto thing. Like, it can't go anywhere. Like, okay, maybe not. Yeah, it's definitely, you could definitely say, okay, crypto could go to zero, right?
Mm-hmm.
Easy. Yes, it definitely can. Everything can go to zero. But if it does not go to zero and it takes off, where will you be? You know what I mean? Will you just be left on the ground for scraps, hunting for scraps?
Yeah. There's not, it seems like, especially if the traditional financial system kind of takes a dump, then there might not be too many other places that you can get decent returns, right? There already aren't very many places.
Yeah, I would expect a rotation into dollars, right? The U.S. government still has a lot of power, a lot of sway. It's still a reserve currency. You can see a rotation into gold. I don't see a lot of the older investors ever rotating into crypto because it's just.
I think they'll come.
It might take them a little longer, but it comes down to trust, and a lot of them don't trust the internet and digital communication in general, and have a distaste for it. I'm talking about an older generation of investors. They're just not. I think they don't need to go into crypto.
I think one of the what I'm starting to see personally is
I've seen some older dudes. I should say.
I would say even older family members, right?
Yeah,
and they can ask you about it, and the youth can tell them about it. People they know can tell them about it, right? And show them real things, which is, at first they might distrust it, but then I think it sinks in after a while, and it's like, okay, how come I've never heard this level of detail about how anything else works? But yet, my nephew knows.
All people in cryptocurrency want to talk about all the inner workings.
And they can talk about this and explain what happened or what, whatever else.
Or what's going on, how it works.
Right. Or the dangers of it and all this. And like, it's a way more genuine conversation than what you're having with, the stocks. I can tell you like, okay, I made good money on this stock or whatever, but nobody ever asked like, well, how's it actually work? Like how many, how's it being distributed?
That's actually a great point. What I tell people sometimes is and for anyone listening, if you're having like an argument with someone about cryptocurrencies, just flip it around on them and have them explain and defend fiat currencies. That's all. You don't need to say anything.
Right.
Just be like, all right, well, why do you hold that? Yeah. What gives the dollar value, right?
What's it backed by?
You really don't need to defend Bitcoin. Just have them defend. They have no idea. They have no idea how the fucking thing works, and they wouldn't even know where to start to defend it. Nope. And as soon as they do, they'll get so tripped up that they'll probably get mad and leave.
Yeah.
If they're irrational, if they're a thinking person, they might be like, you know what? I need to rethink this, right? And I might need to dive into crypto.
I think that's what you need to prereface it with too. Is like, hold up, like, are you a thinking person? Like, will you
you able to entertain new thoughts?
And then this is what I told people early on when I explained to them about Bitcoin. I was like, check this out. Don't think you're going to understand this today. You know what I mean? Like, give it a week, maybe a month for you to digest it, because
just to get the surface level,
right? Because you can't
if you want a deep conversation.
I mean, I've been in it for years, and I still don't fully understand it.
No one will forever, right? It's too complex.
But I understand it a lot more than I understand, and it makes a lot more sense to me.
You have like an intuitive picture of kind of what's going on,
right?
Right. You don't need to. Not everyone needs to be an expert on every little detail, and no one can be.
I'm not a mechanic. I don't know every detail about the car that I
but you know how to fucking drive it, and you know
100,000 miles this last 3 years.
Exactly.
Yeah, and there's that question of, okay, it's not okay, Bitcoin is backed by whatever you want to say it's backed by. You can say physics or cryptography. That's usually what I think. But then it's like, okay, so what? Your fiat currency is backed by the full force of the United States military. It's like,
and promises that the central bank gives about the currency, right?
right. But it's just like, okay, even if it's backed by all those things, you've had tons of fiat currencies in the past that have been backed by those exact same things, and they've pretty much all failed at one point or another, right?
Yeah.
Average age is 50 years of a fiat currency.
Yeah.
It's hard to keep, a money system going. It's very difficult. And for, these nation states, it's quite the task.
All right, so for those of you who've been watching us on the live stream, we did have a little bit of a video hiccup, but we got a good 45 minutes into it, so I'm chalking it up as a success. So if you want to share the video, or if you want to subscribe to the YouTube channel, it's Captain Crypto Show. Follow me at Captain Crypto HD on Twitter. I think on Facebook you might be able to find me as Captain Crypto Show as well. So hopefully by this time next week, prices will be right back up again. But until then, there's your captain wishing you fair winds and following seas, guys. Set sail.